Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. It is Monday, March the 20th, and this is an important week coming off of a couple of very important weeks that I think are very bullish for the price of gold, silver, and the stocks of the companies in those metals. I talk about the companies in my shows. Today, I'm going to talk about the reasons why investors should be getting pretty aggressive with their positioning in gold, silver, other metals, and especially in the stocks. So let's wind back to just a couple of weeks ago. Silicon Valley Bank had a bank run. The key culprit of that, I believe, was their asset base, which was holding a lot of long-term bonds and mortgage-backed securities. And so when they realized that those positions were going against them in a very aggressive way, and they needed to raise a bunch of money to be able to look after their depositors, those depositors started to leave en masse. And this caused a bank run. Shortly thereafter, a couple more of these smaller banks, Signature and the other one always escapes me, but not this Sunday, the Sunday before, the Federal Reserve had to step in and close those banks and then bail them out. Well, at least the depositors were bailed out. Now, the Monday after that Sunday, the banking stocks got just pummeled. And what I was talking about on the weekend was that I thought the small banks were going to see a lot of their depositors taking their money out and putting it into the big banks. The big banks are the ones that have their depositors' insurance more protected. And I thought there wasn't a lot of reasons why people should keep their money in the small banks. So that started a wave of this happening. And on Monday, many of the stocks in these small banks were also halted because they were seeing their investors getting out of the building as quickly as they could. And basically, I don't blame them. The asset bases of a lot of these small banks, and there's a lot of them, I'd even argue that the biggest bank, the Federal Reserve, has similar asset problems that are holding a lot of long-term bonds and mortgage-backed securities that are underwater. But I'll leave that for later. Nonetheless, we saw that the small banks seen a lot of their depositors come out, and then the investors came out, and I don't think that's going to stop anytime soon. I don't see many reasons for depositors to keep their money in those small banks. They've got these problem assets, and that certainly hasn't gone away. The big culprit of that problem is the Federal Reserve. You know, after 14 years of near zero interest rates, they rapidly raised them in 2022 and in the early part of 2023. And when you do that, that's going to start breaking things. And we started to see that later in 2022, actually. Housing sales have gone down, automobile sales have gone down, big ticket items have gone down. The consumer is living off of their credit cards now and paying just loan shark rates, 19, 20%. But the Federal Reserve kind of ignored that. Now that this banking situation is such a crisis, is the fair way to call it, is happening, I don't see how the Federal Reserve on their meeting in a couple days can continue raising interest rates. A couple weeks ago, 50 basis points was sort of baked into the cake. And now I no longer think it's a coin toss. Whether or not they do a quarter point, I don't think they're going to do anything. Some people are even talking about the need to lower interest rates. I think that's what if they don't do it now, they're certainly going to be doing it in the not too distant future. They caused this problem of these underwater assets, and they can insure the deposits all they want. They can print money like it's going out of style to insure those banks. But when you're talking about $17 trillion of deposits, that's an awful lot of money printing in order to secure those deposits. So I don't think it's very long. I believe that the Federal Reserve will stop raising interest rates at their next meeting and talk about the possibility of lowering interest rates in the not too distant future. But the big thing that's going to scare a lot of people and drive down the price of the US dollar and up the price of gold and silver is they're going to have to address, I don't know how they're going to address it, but they're going to have to address the banking crisis. Now, they'll probably come up with some other term for it, but rest assured, it is a crisis, and it's a long way from being over. To get it over is going to cause lower interest rates. And basically, I believe what the Fed has, only option they have left is to let the economy run hot, let the inflation run hotter than they are comfortable with, and try to grow out of the problem that they created. Whether or not they do that, it's like the old muffler commercial. You pay me now or you pay me later, when the guy drives in with the muffler hanging down and scraping on the road. You can keep driving like that, but sooner or later, you got to fix that muffler. And that's the situation we're in right now. Sooner or later, the Federal Reserve is going to have to address the problem that they have caused, which is this, after 14 years of near zero interest rates, to then dramatically raise interest rates, you're going to break things. They've been breaking things for several months now, and now they're breaking the banking system. And that's the Federal Reserve's favorite child. And I don't think they're going to throw that baby out with the bathwater, and they're going to have to change their course. And when they change their course, I think it's going to be bearish for the US dollar, because what has been so bullish for the US dollar in 2022 was these relentless interest rate hikes. So when they're raising interest rates, investors want to own US dollars so that they can take advantage of those bonds. These big investors out there can take advantage of these high yielding bonds. But when they change course, and the opposite happens. And I think that's exactly what's near to happening here. And this is going to be very bullish for gold, silver. I'm also bullish on other metals, and I'm going to talk about those as well. So let's get on to, I'm going to do a screen share here and bring up the US dollar. Just give me a couple of seconds here, and I'll share screen. There we are. Okay. So as you can see here, in much of 2022, the US dollar was on this relentless move as they were raising interest rates. Then in September, it started rolling over. Had a very big drop, had a death cross in January, had a tough January effect reading. And then in February, it started to move up on it because some hot employment numbers came out, and people were starting to think, oh, the Fed is going to keep raising interest rates 0.5%. And so the party's back on for the US dollar. But as you can see here, around March the 9th, it started to get under pressure again. And as of today, it's trading right on the 50-day moving average. And I think it's trading right on the 50-day moving average. And I think it's a day or two away from dropping well below that 50-day moving average. This is the important trend to follow. I think this is the trend that you're going to see a lot of in 2023. I don't believe this counter trend rally is long-lived. I think it's already topped out, and now we've got more downside to go. So let's take a look at gold. Gold triple bottomed back here in September, October, and November. As you can see, as the US dollar was going up, it was getting under pressure, had a death cross back here in July. But then after this triple bottom, it blasted off to the upside, which was not long after, right around here is when the US dollar got under pressure. So it took a couple months and then it blasted off. It had a very big run through January, went through a golden cross, had a spectacular January effect reading. And then February came along, the US dollar got strong and gold got punished. But then it had a double bottom. And right around the same time that the US dollar got under short-term pressure, it blasted off again. Today it traded as high as 2015, which was a pretty spectacular run. Now again, it's trading well above the 50-day moving average, almost $100 above the 50-day moving average, and almost over $200 above the 200-day moving average. I believe this 200-day moving average is about to get much stronger, and the 50-day moving averages as well, because I think the price of gold is about to blast off and go into an important window between 2000 and 2500. That's what I'm expecting to see happen. I think it'll pass that 2000 point any day now. And over the next few months, it will trade in that 2000 to 2500 range. And then we could see an absolute blast off, because that's around the time that I anticipate that the Federal Reserve will actually realize that they do have to start lowering interest rates. There's after we saw the Silicon Valley Bank and the Signature and I can't remember their name, go under pressure. Then we also saw First Republic get under pressure as well. And late last week, the big banks had seen so many billions of dollars flowing into their bank account with new depositors that they actually came up with their own scheme where the big banks put $30 billion into the First Republic to try to shore it up. On Monday, that earlier today, First Republic got just beaten down again, and I guess they're going to have to come up with a new plan. And the other thing that happened over the end of the week was Credit Suisse got into, well, they've been in a lot of trouble for a long time, but now they basically cooked their goose. And UBS had to come in and take them over, and the Central Bank of Switzerland, the Swiss National Bank, had to backstop that purchase, and the purchase. When a lot of these bankers and everybody, we hear them talk about free markets and capitalism. Well, when the what hits the fan, the capitalism goes out the door, and the Credit Suisse shareholders, which have the right to vote on this, the Swiss National Bank has made a change to the law so that now they don't get to vote on this takeover, take under, and ultimately it's probably going to turn into a very good investment by UBS, but they don't, the shareholders don't get a vote on that. So as I said, when you know what hits the fan, capitalism goes out the window. And another situation that happened over the weekend was there's these plane tracking websites, and there was a bunch of bankers that were flying into Omaha to meet with Warren Buffett. Now, Warren Buffett's a very a shark, if you will, a shark in sheep's clothing. But in reality, he knows how to make money, and he knows how to protect his downside. What I think is probably going to happen is you're going to see Warren Buffett, who's sitting on about $120 billion of cash at Berkshire Hathaway, is probably going to make some investments into the banks that will be backstopped by the government, so that he has very little downside risk and complete upside potential. So this is where we stand out as of this weekend and Monday today. Today, First Republic, their stock was just hammered. And so that bailout that the banks, that scheme the banks came up with, the big banks, to deposit all the money that was flowing in, they decided to take it back and deposit 30 billion of that into First Republic to try to bolster it. But that didn't work. It only worked for a day or two. And now the stock is getting just hammered. And I can't understand why any investor or depositor, for that matter, would put their money into these, keep their money in these small banks that have very similar problems to the Silicon Valley Bank. So this is why gold is doing so good. And I think the party is just getting started. We're seeing, let's take a look at silver, because that's another one. I think I made a case that I think we should be going back to a gold standard, maybe not an official gold standard, but I certainly believe that gold investors, or I mean, investors should be backing themselves up with gold. And I also think there should be a silver standard. And as you can see here, after it broke out in November like gold, it kind of went sideways through January. It did have a golden cross in December. Then in February, it got pummeled, traded well below the 50-day, well below the 200-day. But then when all this banking crisis started, it started to move up again quite aggressively. Right now, it's trading slightly above the 50-day moving average and pretty soundly above the 200-day moving average. I believe the 200-day moving average is about to go bullish, and that this 50-day moving average will start to move up again as the price of silver goes up. But I'm also very bullish on copper. And people will say, well, how can you be bullish on copper if the economy is in such a tough position? Well, it goes back to my argument about what the Federal Reserve has to do, which is stop raising interest rates. But the follow-on of that is that they're not too long away from doing more quantitative easing. Everybody's arguing about whether these are bailouts or quantitative easing that's happening right now, when the federal FDIC, the Federal Reserve, and the Treasury all gang in to protect the depositors of these failed banks. I don't know what you want to call it. I don't really care what you want to call it. The reality is that the Federal Reserve has caused this problem. And to fix it, they can't keep raising interest rates. They're going to have to start lowering interest rates and do more stimulus, pumping more cash into the system in order to meet all of this pressure that's going on to the money supply, as these people are taking their money out of one bank and putting it into another bank. I know a lot of them are doing it digitally. But the reality is that they're going to have to pump more stimulus because they've now broken the real estate market, the automobile market, the big ticket item market. Consumers are so stressed that they've got to use credit cards at 20% interest rates. The Federal Reserve has to put something back into the system to try to protect this. So what that is more stimulus. And when they put more stimulus in, guess where that's going to go? A lot of that's going to go into the electric vehicle revolution and alternative energy sources. And it doesn't matter whether you're looking at automobiles or computers or all your electrical devices, your telephone, they all need copper. Copper is the most critical metal. And when the stimulus comes, copper is going to blast off. Right now, it also moved up nicely in November, had a golden cross in January, a very powerful January effect, came under pressure in February and into March, but then it's bottomed out. It's right now trading halfway in between the 50-day moving average and the 200-day moving average. I think it's going a lot higher, and that's why I'm bullish on copper and the copper stocks. So I'm going to go back to gold here as I close off my rant about why I believe that the best thing investors can do is get your money out of these small banks, put them into the big banks that are too big to fail. The Federal Reserve, the FDIC, the Treasury will all protect them, those big banks. They won't allow those to fail. So your money, your cash is safer in those. Now, Nouriel Roubini, who's called Dr. Doom and once called the the gold a barbarous relic, is now bullish on gold. And for a guy like him to change course, I think is a pretty good sign that, we're into a better market for the price of gold. But his argument is that you're best off in short-term treasuries and in gold. I believe gold is a better option because I think those short-term treasuries, the yield is going to start going down. And I think that gold has a lot of blue sky ahead of it. So I believe that you're better off in gold, you're better off in silver, you're better off in copper. And I believe that it's a good idea for investors to think about the gold standard. And what that means is that in the old days, the central bankers of the world had to back their currency up with hard assets like gold. Well, it was gold. And I think that that's what investors need to do now. They need to go into their own gold standard. And I wouldn't stop at the gold standard. I'd also be a silver standard, and I'd be a base metal standard. I think or even commodity standard. I think your money being invested into things that we need in the bank, the currency system, the banking system, the economic system, which is your gold and your silver. Plus, silver also is used in your solar panels and other industrial uses, which I think are going to be beneficial of the stimulus that I think is coming. And the things we need to eat and house and clothe ourselves, these are all going to become important places for investors to put their money. But my biggest argument is, okay, if you're going to be investing in the metal space, there's actually an even better way to invest in the metal space. And that's by buying the companies that have those metals in the ground. And the reason that I say that is because I look at valuations of the biggest companies in the mining sector to the smallest companies. And the valuations of those companies right now are some of the lowest that I've seen in my career. The last time they were at these kind of valuations was the year 2000. And after the year 2000, we saw a 10-year bull market in the price of metals from 2001 to 2000, late 2011, early 2012. You can split hairs on when it actually happened, but it was a phenomenal period for investors into the quality stories in those kind of stocks. And that's where I think for the investor that wants the best growth, or to see growth, is in those kind of companies. To protect your money, I think you can buy the metals, but to see your money grow, I think the best place is in the mining stocks. And in the mining stocks, I believe the most important part of the sector is the exploration stocks. And why I say that is, not only do I believe that these metals are good investments because of the current economic situation, there's a second reason that I believe that they're very bullish, and that is in the supply and demand scenario for these metals. Many of them, I started in the business of mining sector in 1993. And even before I got into the sector, there was a long periods of underinvestment in exploration to find new mines and the development of new mines to replace old mines. And that has continued pretty much nonstop since then. Yes, there has been periods where there's more investment, but even in those periods, they're not finding and building enough to replace those old mines. And those old mines that the mining companies are relying on are actually quite ancient. They're nearing their deathbeds. And as they're nearing their deathbeds, the mining companies have been high grading their mines and going deeper and deeper for lower grades and into poor jurisdictions that bring on their own problems. So this is why the supply side is very, very tight. Look at copper, for example. For many times in my career, the metals exchanges would have long periods of inventory to cover the supply. Now they're down to days. You know, you get a strike in Chile, which often happens when copper is high. That is going to seriously affect the day-to-day supply of copper. So all of these metals that I'm bullish on have very weak supply chains, but yet they have strong demand. And that demand that's coming in for gold and silver is quite remarkable. You look at the since the 2008 economic crisis, the central bankers of the world have year after year been buying more and more and more gold. And now in 2022, you saw a record year, and I think 2023 is going to blow away 2022. So this is an important factor for investors out there to pay attention to. The central bankers are showing you their cards. They're saying that this debt situation with the world and the fiat currencies are in problems, and they're backing their own economies up with gold, and you should too. I can't stress that enough, that you know, the central bankers buying, the big investors out there buying, small investors buying. You look at some of these services that the consumers use to buy gold, they're being stressed with all the orders that they're taking in. So I think that gold and silver and other metals are going to be off to a roaring bull market that actually started in November of 2022 and is going to have a spectacular year in 2023. And I think that investors should be paying attention to the stocks in those metals as well. Again, you want to protect your money, put it into the metals. You want to see your money grow, put it into the stocks. Okay, I told you that I wasn't going to talk about my picks because I just talked about them on the weekend. And I'm going to point you to an article that I wrote. Just give me a second here. Just a couple days ago that you can find on my Substack at rocksandstocks.substack.com. I titled it A Golden Path as Central Banksters Are Ready to Make a Lose-Lose Decision That Comes with the Silver Lining from Dr. Copper. I wrote that 2 days ago on March the 18th. I was actually thinking about changing this title because what I was really making the point of is what the Federal Reserve needs to do. But I kept it at central banksters, meaning more central bankers. And I'm glad that I did because it proved to be sort of a prescient statement in that look at what happened with Credit Suisse over the weekend. They had to force UBS to buy Credit Suisse and support that purchase with billions of dollars in support for UBS to buy Credit Suisse. And so in this article, I started it by writing about the reasons that I'm bullish. I also brought up this Lassonde curve, and I really think it's an important thing for people to understand. I spend most of my time in here picking companies and in here. These are the two sweet spots, I call them. This is before discovery, and this is what often happens when a company makes a discovery. Then you have this orphan period that's also called the development discount window. And late in the development discount window, you get the opportunity for another big spike. And so I have companies, almost all of the companies I feature are in these two sweet spots. Now, there are opportunities to make money in the development discount window or this orphan period, especially in a bear market because, as a bear market transitions into a bull market, which I think is happening with gold. Because in the bear market, you can find companies with resources and in the early stages of feasibility that their stocks are so beaten down that when things get more bullish, their stocks will go up. I have a couple of those in my reports. So then I talked about gold, talked about the US dollar, and then I went through my various different stock picks, and you can go find those on that report that I wrote on March the 18th on my Substack at rocksandstocks.substack.com. So there you go, folks. Today I wanted to talk more about why it's so important for investors to be putting their money into metals and metal stocks. I would start with gold, but quickly after that, I would be doing a silver standard. And quickly after that, I would be doing a copper and base metal standard and a lithium standard, because I think that those base metals and lithium will benefit as the Federal Reserve starts to stimulate, which I think is only maybe as quick as a month or two away, maybe 3 to 4 months, but it's coming. And what's coming right in our face in the next couple of days is the Federal Reserve is going to be meeting. They're going to be, I believe, stop raising interest rates, talk about the possibility that they will have to lower interest rates and stimulate the economy. And the big green light for investors into gold and metals and metal stocks is that he's also going to be somehow mentioning the bank crisis. I'm still very interested to how they spin it to talk about a crisis and not mention the word crisis. But however they spin it, investors are going to panic when they realize that the Federal Reserve is panicking. Now, your smartest investors, your biggest investors, your central bankers of the world are all already telling you the playbook. Buy gold, buy silver by extension, buy the metals. Look at these companies that are sponsors of my shows and my picks in that report I just mentioned. In that report, I talk about 30 companies that are my closely followed picks right now. I think about 12 or 13 of them are sponsors. The rest are non-sponsors. All of my picks or sponsors fall under the same testing, if you will. There's just some that are kind enough to be sponsors of my reports. You can see them here, and they make my reports possible. On that note, as always, my shows are for information purposes only. You have to talk to your financial advisors before making any investment decisions to assess what companies, whether you're looking at my picks or anybody's picks, to assess whether they fall into your risk profile, and do your homework. No matter what company you're looking at, the more informed you are about that company, the more you'll make logical investment decisions and not emotional ones. And right now, that's a crucially important thing, because a lot of people are trading on emotions right now, and you want to trade on logic. On that note, have a great day, and we'll talk to you soon.